All right, so today I wanted to make a video on a stock that I've never talked about before that I will definitely be starting to dollar cost average into. This is Dollarama. Again, they are a Canadian company in the retail sector. Again, this is a dollar store, right? They operate a chain of dollar stores. And there's many reasons I'm interested in this company. But, I mean, first things first, I do go to the dollar store or Dollarama probably once every week, for sure every 2 weeks. And it's just to get those little things here and there. And every single time I go, and honestly, I go during the week, like in the middle of the day sometimes if I have a day off. Like, I go at pretty random times. And every single time I go, it seems to be busy in there. Like, there seems to be quite a few people. There's almost always a lineup when you check out. And again, it just seems like somewhere that's always busy. And again, in the city I live in, it's about 75,000 people, and we have 3 or 4 Dollaramas. I'm not actually sure. I know for sure 3 because I've been to at least 3 of them, but there might even be another one. And again, that's in a city of 75,000 people. So the point here is, I think that they have a lot of room to grow, given you have a Canadian population that is absolutely skyrocketing. Now, again, that's going to come with its own set of problems, but given the population is skyrocketing, the amount of small to medium-sized towns is going up very drastically, right? The suburbs are growing drastically, and I think that that's a lot of growth drivers for a company like this. They already are a pretty good size, just under $29 billion. So again, that's something to take note of. That future growth is definitely going to be more challenging than past growth, but I would argue, given the population growth that we are seeing and the fact that inflation probably is going to be more sticky than most people are letting on, I think a company like this that offers basically a lot of traditional grocery type stuff. Now again, they're not the exact same, but they are similar. For a value, right? I mean, virtually everything you get there is cheaper than your Walmarts and superstores of the world, or even Amazon. I think that that's going to help because there's a lot of people out there that are just making ends meet, and I think that the number of those people probably only is going to go up over time, unless the government gets their head out of there, you know what. But I don't think that that's going to happen. So that's my first reason for being interested. But again, the main reason is you need to look at the numbers in this company. Again, free cash flow yield of 4.18%. That's not great, but it's still decent. Again, I will get into the dividend sooner. Again, a current ratio of 1.5. That's solid. Growth is very good in this company. I'm actually extremely surprised at how quickly they have grown, given they are a dollar store, right? You wouldn't think that a company like this is growing so well. Management does a very good job, and I think that's one of the main reasons why this company does so good is the management does a very good job. And again, another thing that is surprising, if you look at a superstore or a Walmart, their margins are pretty thin, but the margins for this company are actually pretty solid. They're not the best I've ever seen by any means, or even very good, but they're actually pretty good. And we look at the valuation on it, it's below its 5-year average price to free cash flow. It is a little bit above its 5-year average PE. So I would say it's probably about fair value where it's at right now. And I'll get into that in a little bit. So let's dig into their financials here first. And I mean, one of the many things that really impresses me about this company is that look at how efficiently they are buying back shares. I mean, ever since 2012, they've been buying back shares, a significant amount of shares every single year. They had 453 million shares outstanding in going into 2012. Going into 2023, they had 291 million. So that's a massive drop. That's like what, like a 20% drop, even more in just 11 years. Like that's phenomenal right there. The amount of shares that they're buying back. And I mean, if you look at their income, I mean, look at how well their net income is growing. It's just growing absolutely phenomenally well. And I think that that's a trend that's going to continue. Probably not at the rate that it has in the past, but I think it's going to continue. Again, if we look at their metrics, look at their free cash flow margin and operating margin. Again, those have been very consistent, right? Very consistent going back. I mean, look at the last 5 years. The minimum their free cash flow margin has been is 14%. Operating cash flow 17%. I think that's very good. If we look at their return on invested capital as a more accurate number, the lowest that number's been is just over 20%, which is very, very good. If we look at their free cash flow per share, again, this is a number that's grown very, very nicely over time. Now, again, 2022 was better than 2023, but again, I think that's a one-off. I still think it's going to grow over time. Again, not at the rate that it has, but it's still going to grow nicely. So again, the dividend is another thing that I really, really like about this company. Now, again, the dividend yield right now is only 0.28%, 28 basis points, but they're growing at 12% per year. The payout ratio is only 8%, meaning they're going to keep growing it at 12%, right? They're going to keep growing it at 12%, I think. And I mean, if you go back 10 years, you would have just over a 2% yield on cost. And not only that, look at how well they've outperformed the S&P. They've literally tripled the S&P over the last 10 years. Let's look at the last 5 years and see what they've done. Right, the last 5 years they've roughly doubled the S&P. So this is a company that I think has mostly tailwinds, not headwinds. This is a company that, again, they're very boring. No one is super anxious to get into a company like this. But again, they're easily have outperformed the S&P over the last decade. And honestly, I don't think they're going to double it over the next decade. That's possible. It wouldn't surprise me. But I think that's probably unrealistic. But if they can buy back 2 or 3% of their shares per year, they can grow their dividend 12% per year, they can maintain their current levels of profitability. All of those three things, I think that they can do. I don't think that any of those are out of the realm of possibility. And given that happens, they're going to beat the S&P. So, right, so let's look at their historical valuations here, right? So operating cash flow looks like it's the best way to value this company. Again, their average price to operating cash flow over the last decade has been just over 22. They're currently at 19.5. And I mean, if you look at the last decade, the vast majority of that time they've spent above 18. It looks like 17, 18 is kind of the low that it hits. So based on that metric, if anything, it's undervalued. Let's look at if you look at their PE. The average PE is 28.19. The latest is 30.5. So, I mean, based on that metric, maybe you're a tiny bit overvalued. But, I mean, PE earnings, I don't think are the best way to value a company. I mean, operating cash flow, free cash flow is almost always a better way to value a company. So, like I said, I think that this is a company that you can start dollar cost averaging, even though it's very close to its all-time high and 52-week high of just over 108, or just under 108. Sorry, that was about a couple of weeks ago that it hit that number. We had a decent little correction. They're down about 5% or so since then. But like I said, look at this company. They're just a steady staircase higher over time. And like I said, if we get a recession, like let's just think of the worst case scenarios here. If we get a recession, in a lot of ways, people are just going to be more likely to go to a place like this because they offer that value stuff. They offer stuff at a better price than most competitors. So, and I think that this is happening already for a lot of people. I mean, whenever I go to a place like this, there's kind of three sets of people I find. There's like the people that are there just for candy and snacks because they're cheap. There's the people that are there just for your knickknacks and things around the house, like your utensils and birthday cards and just kind of those random things that you kind of need. And then there's the people that are there legitimately because they can't afford to spend anything more than the bare minimum on stuff. And again, if we get a recession, I think that number is only going to go up. So, like I said, I think that inflation is going to stay more elevated than people think. I think that the economy is going to, especially in Canada, is going to stay. I think we probably won't see a major recession, but on the flip side, I don't think we're going to see some major amazing growth, at least anytime soon. So, given those facts, or we don't know for sure, but given those hypothesis, given that, I think that a company like this overwhelmingly likely will do well and will continue the pace that they're on. Now, again, like I said, the bigger a company gets, the harder it is to grow. But like I said, I think that there's a lot of tailwinds for a company like this. And I think that there's also a lot of people out there that are still sleeping on companies like this. There's a lot of people that are chasing the returns of tech and AI and a lot of that stuff. Some of it's good, but a lot of it's clearly overvalued, and a lot of it's overvalued and it's complete garbage. And there's going to be the market is always cyclical, and I think that a company like this in a downturn, I think that's going to be one of the places where people turn to. So anyway, that is my thoughts on this company. Again, I think that this is one of the best Canadian dividend growth stocks as well. You're going to have to hold it for quite a while to actually reap the rewards, but this is a company that I think I'd be comfortable holding for 10 or 20 years. I don't see any reason why not. So that is my thoughts on Dollarama. Again, if you liked the video, please like, subscribe, comment, all that good stuff, and stay tuned for more.